All right. Hello.
All right, class, let's get started. Today, we're diving into something that's, well, absolutely crucial for your financial life as a student. How the Canada Revenue Agency, the CRA, looks at the money you get for school. Think of this as more than just studying for an exam. This is real-world knowledge that's going to help you manage your money for years to come.
So let's just get right to it. The big question on everyone's mind. You know the feeling, right? You get that email, "Congratulations, you've landed a scholarship." It's an amazing moment. But then, maybe a little later, that practical little voice in your head kicks in and asks, wait a minute, does the government get a slice of this? It's a super common question and honestly a point of a lot of confusion. So today, our goal is to clear that up once and for all.
Okay, first things first. Before we can even get into the nitty-gritty of exemptions and special rules, we have to understand the CRA's core philosophy. This is the foundation for everything else. It's how they decide what to do with any money that comes your way, no matter what it's called. Now, if you're going to remember one thing from this whole explainer, make it this. This quote right here is the golden rule. The CRA does not care what you call the money. You can call it a scholarship, a grant, a gift, whatever. They look past that label and ask, what is this money really for? What is its true nature? Is it to help you study, or is it payment for a job you did? That single distinction, true nature over label, is what drives all the tax rules that follow.
So with that big principle in mind, let's start applying it. We'll break down the most common kinds of funding you're likely to see: scholarships, bursaries, and prizes. We'll figure out what they really are in the eyes of the taxman.
Okay, so when it comes to scholarships and bursaries, for tax purposes, they're basically treated as the same thing. They're both just amounts of money given to you, the student, to help you get through your education. The key here is that you're not expected to do any specific work in return. And don't forget, a bursary can be really broad. It's not just for tuition. It could be for your living expenses too. The whole point is, this money is there to support your academic journey.
Now, prizes are a little different. The CRA draws a really sharp line in the sand here. A prize is considered taxable income if, and this is the key part, it's for an achievement in your field of endeavor. So let's say you're an accounting major and you win an award for getting the highest marks in your program. Well, that's directly tied to your expertise and hard work. It's income. But on the other hand, if you win the lottery, that's just a windfall. It's random luck, totally unrelated to your skills or your studies. So it's not income. That connection to your field of study is everything.
All right, now for the part you've all been waiting for. This section is what I like to call the student's tax cheat code. This is where we learn how you can take that scholarship and bursary income we just talked about and make it completely tax-free. You're going to want to listen up for this.
So the CRA gives everyone a starting point. Any taxpayer in Canada who gets a scholarship, a bursary, or one of those taxable prizes gets to knock the first $500 off. It's a basic, universal exemption. So if you got a small award for, say, $500, you already know that part is tax-free. But trust me, this is just the beginning. Yeah, that $500, that's just the appetizer. For most students who are actually enrolled in a qualifying program, the rules open the door to a way bigger exemption. One that can literally make thousands of dollars in funding disappear from your taxable income. Let's break down how it works.
And here it is, the full scholarship exemption. It's really just a simple two-question test. Question 1, are you a qualifying student? If you're enrolled in university or college, then yeah, that's you. Check. Question 2, was the award given to you because of that program? Was it meant to support you while you study? For pretty much any academic scholarship you can think of, the answer is a big yes. Check. And if you can check both of those boxes, the result is fantastic. The entire award is fully exempt, not just a piece of it, all of it, tax-free.
Now, there is one important little caveat here for my part-time students. If you're studying part-time, the rules are a bit different. Your exemption is usually capped. It's limited to the amount of your tuition fees, plus whatever you spent on materials for the program, textbooks, lab equipment, that kind of thing. So it's still a really great deal, but it's not the unlimited exemption that full-time students get. Just something to be aware of.
Okay, let's shift gears and get into something a little more complex. This is especially for you folks in graduate studies, doing your master's or PhD. This is where things can get, well, a little messy. Is that funding you're receiving a grant for your own research, or are you actually getting paid to do a job? Because believe me, the tax difference is huge.
So how do we tell the difference? We go back to our source of truth, the Income Tax Folio. It tells us that if the primary purpose of the money is to do research for its own sake, meaning your goal is to discover new knowledge or find new ways of looking at old knowledge, then it's a research grant. The focus is on the discovery, on advancing the field.
That's a very different thing from being paid to provide a service. This table lays out the key differences really well. A research grant is about the project. Employment income is about providing a service. They're even taxed under totally different parts of the Income Tax Act. But look at that third row, expense treatment. This is critical. If you get a research grant, which will show up on a T4A slip, you can deduct your legitimate research expenses right off the top. That's a massive advantage. But with employment income, which you get on a T4 slip, your ability to deduct expenses is incredibly restricted. Oh, and a heads up for anyone heading that way, postdoctoral fellowships are almost always considered employment income.
So how can you tell if what you have is really a job in disguise? Well, ask yourself these questions. Does the person or institution paying you get to control what you do and when you do it? Are they giving you specific tasks like teaching a tutorial or marking assignments? Are you getting any employee-style benefits like pension contributions or insurance? Is there a string attached, like you have to go back and work for them when you're done? If you're answering yes to these, then chances are you're in an employment relationship, and that money's going to be taxed like a salary, no matter what they call it.
Whew, okay. We have covered a lot of ground here, from the basic principles all the way to some really tricky scenarios for grad students. So let's pause and boil it all down. Let's consolidate this into the key takeaways, the things you absolutely need to remember when it's time to do your taxes.
Here are the 5 big rules to lock into your brain. Number 1, it's all about the true nature of the money, not the label. Number 2, that full scholarship exemption is your absolute best friend as a student. Use it. Number 3, research grants do count as income, but remember, you get to deduct your expenses first, which can make a huge difference. Number 4, if it walks like a duck and talks like a duck, if it looks and feels like a job, the CRA is going to tax it like a job. And finally, number 5, your practical action item, always check your tax slips. Your T4A and your T4 are the first clue as to how the person paying you has categorized that money. So we're going to end today not with a simple summary, but with a question that I want you to take with you. Understanding all these rules, that's step 1, and it's a huge step, but the real power comes from applying this knowledge. As you move forward, as you look at different funding offers or negotiate research positions, how is what you learned today going to shape your choices? Thinking about that now doesn't just make you better prepared for an exam. It makes you a smarter, more proactive architect of your own financial life.